Thank you, Richard. Looking forward to this panel today. Before I start, what I'd love to do is for my fellow panelists to maybe introduce themselves. So, Pallavi, maybe if you'd like to start.
Hi, everyone. My name's Pallavi Mantrao. I'm an audit director at Lloyds Banking Group. I look after technology, transformation, data, and sourcing for Lloyds Bank. I've been with the bank for about 10 years, done a variety of roles, including cybersecurity, op resilience, payments, technology. Prior to that, I was a tech consultant at KPMG, leading their focus for financial services and the telecom industry in India.
Good afternoon. Thank you, everybody. My name is Madhush Gupta. I am the elected policy lead for innovation and technology for the City of London Corporation, which is the local authority for where we're sat today. The City of London Corporation does enormous amounts of work on the national policy stage to support financial and professional services and the technologies that enable them. So I'm very delighted to be here today. I also sit on the board of Innovate Finance, the Centre for Finance, Innovation and Technology, and the National Cyber Resilience Centre Group. Thank you.
That's going to be quite a hard act to follow, but I'll try. Hi, everyone. I'm Usman. I'm a partner at KPMG Law. I lead our technology, IP, and data legal team at KPMG Law. I'm also head of TMT for tax and legal across the firm. I'm a technology lawyer by background. I work on both transactions as well as advisory work. We are very interested in AI because it brings together a lot of legal disciplines. In the current environment, we believe that it's an important role for us to play in helping clients understand risks, build mitigations. Before KPMG, I was a partner at a medium-sized city law firm, and I'm delighted to be here as well.
Thank you all. So the danger of the title of this session is it's all very, let's restrict you all because of the resilience agenda. As we've heard earlier, there's some very, very exciting opportunities that we have from adopting AI. AI is not new, but as Rob said earlier this morning, the acceleration in the innovation in AI far outstrips those of us who remember the dot-com bubble. Just to give you a stat, ChatGPT turns 1, I think, later this month. They got 1 million users in 5 days. It took Twitter 2 years. Admittedly, it did take Instagram only 2.5 months, but 5 days versus 2.5 months versus 2 years. It's without a doubt, there is an acceleration of adoption, and it's all incredibly exciting. But the subject here is around maintaining that resilience. I think it was mentioned earlier that Joe Biden signed an executive order last month, and one of his chief of staff made a very interesting comment. He said, the executive order is the next step in an aggressive strategy to do everything on all fronts to harness the benefits of AI, but as well as mitigating the risks. We've heard this morning some great examples of the opportunities, different use cases, whether it's bringing efficiencies, cost savings, personalization in our services, taking us into new business areas. But obviously there are risks, bias, data privacy, risk of collusion, bad actors and fraud. I think we also heard this morning about, I guess, the disruption, the replacement of people. So I think, again, it's been a great time for politicians and AI with Rishi Sunak in Bletchley Park. I think, was it Musk said, there'll come a point when no job is needed. And he's saying that, which is one thing I think we can debate for a long time, and I'm not sure I agree with, but he did say it's the most disruptive force in history, which I think we can agree with. I think that there are two topics that come into this resilience agenda is, can we trust, or where do we sit on professional judgment and ownership, and can we give that to our AI models? And before, just my last thing before I sort of start some ask questions of my panel. Gary Gensler from the US Securities and Exchange Commission in an interview with the FT said that a financial crisis was nearly unavoidable, within a decade if regulators fail to manage AI risks. So I think that's the backdrop of this session today, is we really need to think about how do we harness the power of AI, but also put the appropriate guardrails in place. So I think, Pallavi, you sit in a very interesting position in your organization. You're both a user of AI, but also the purveyor of making sure that people, you ensure that the risks of adoption of AI are managed. So how do you balance those two agendas?
Sure, thank you. So AI isn't new. I think, as you said, ChatGPT's probably fast-tracked some of the hype around around AI, as well as discussion has probably gone to the boardrooms now. And as you said, we are big users of AI in my team. We do a lot of our assurance work through using advanced AI techniques. But at the same time, we're also the third line of defense for our organizations. We need to make sure that AI is used responsibly. And I like to think in the context of operational resilience, it's not a new topic for the banks. There are supervisory statements 1 and 2 that all banks and financial institutions are complying with. Tirelessly, January 2025 is the deadline we all have to be ready by. It's just the use of AI which makes an interesting debate in operational resilience. And, depending on who you ask, some say AI will be the destruction of the civilization, and some say, well, it would be the cure for cancer. It could actually be both. And that's how we like to think about AI. It has risks and it has opportunities. So if we talk about the opportunities first, there's a lot of hype in financial services currently around AI. And most of it is around having a human in the middle. And of course, there's more innovation happening around internally facing processes rather than customer facing processes. So there's a lot of focus on productivity, employee productivity, whether that's through coding or whether that's through automating some of the routine tasks. There's also a lot of emphasis on how can we offer better services to customers, whether that's through personalization, whether that's through conversational banking, which actually is now an alternate channel if the other channels are not available. So it provides a level of resilience. There's also, sorry, I didn't know you guys couldn't hear me, apologies. There's also a lot of emphasis around how financial inclusion can be made a lot better by using AI in some of our customer offerings. When we then start thinking of what does this really mean, there was a really famous incident which happened in the bank in US this year actually. Comcast, which is a telco provider, had a chatbot running which would basically engage with customers, but one of the customers decided that another chatbot will engage with that chatbot rather than the customer itself. And famously, the chatbot managed to save that individual £120 on their telecom subscription by just threatening them on legal implications and implications around poor service. And as a financial organization, we are all facing into a regulatory environment where consumer duty is front and center of what we do. And then you start thinking about we're offering services through chatbots, etc. And we generally hope humans talk to those chatbots. But what happens when AI starts talking to AI? And the risks don't stop there. We've seen instances where on 22nd May, actually, famously this year, you may have noticed, there was an image of a crash in Pentagon. And that sent heat waves through the markets in US before the US government then put in a notice to say, well, that's not real. We all love Martin Lewis. I always look at what Martin Lewis has to say before I buy an insurance, even though I work for a bank which does insurance. There was a famous, quite recently actually, there was an image of Martin Lewis recommending an investment product, and it then actually took Martin Lewis to come out and say he hadn't recommended that product. So all of those risks are really real, and not just that, cybersecurity, our cyber defenses have to be absolutely capable of defending against AI risks. We're looking at opportunities as well. How can we do risk visualization? How can we do predictive analytics to actually stop bad things from happening? And absolutely at the heart of operational resilience, we all know a Tesla car could actually predict that an incident would happen, an accident would happen, and it applied the brakes before the accident actually happened. So how could we use AI to better enhance our operational resilience is absolutely front of mind as well.
But then you're back to AI protecting against AI, potentially.
Always a human in the middle.
Madhush, From your perspective, I know you've written or you've been involved in a recent report and looking at the use of AI in financial services. I wonder whether you could sort of give us your perspective on, again, the opportunities and then the guardrails that need to be put in place.
No, absolutely. Thank you very much. So the City of London Corporation is doing a lot of policy work in the area of AI at the moment. Really thinking about it as a growth opportunity for UK PLC, but how we deliver that growth opportunity safely, that operational resilience piece. And so we published a report last week with EY, and we hosted a big dinner ahead of the conference in Bletchley, where we launched the report, thinking about what are the opportunities and what are the challenges in delivering those opportunities. And I think that piece of work is really important because AI, from a personal productivity perspective, is near ubiquitous today. We all have access to personal productivity AI. It's about how AI within an organization, delivering organizational outcomes for, in the first instance, clients, needs to be managed safely and in a way that can be evidenced and regulated. And for us, if I look at financial services, the regulator needs to come on a journey, and it also needs to upskill its own internal capability in order to regulate AI-driven and delivered services today. So that's a significant focus for the City of London Corporation. We're also doing a lot of work in the area of skills and digital skills. So we've launched, under the new Lord Mayor, Michael Manelli, a qualification in AI ethics. And we're also working towards improving the access for education and reskilling for people mid-career who want to pick up digital skills, and specifically where there is a lack of skills, so things like crypto and AI. And so those are our key areas of focus today.
Usman, I guess the same to you. What do you see? We'll come on to the regulation piece later, but sure. What do you see as the sort of key areas of opportunity, and then again those guardrails? How do you see that? Adding on to what we've heard from Pallavi.
Thanks, Henry. I'll start with the guardrails first. And what I'm about to talk through is more rolling forward in a few years, where financial services organizations will be using very powerful foundational models. I think one practical example, just bringing it back to operational resilience, is when business owners create use cases. We've talked about the opportunities, but finding the right opportunity. At a practical level, are they assessing whether that use case is going to be an input into an important business service, right? Because that's the spectrum in OpRes that you have to look at. And it could be an internal facing service, but that does support an important business service provided to clients. So that then does trigger a lot of decision points, because if it is going to be part of your OpRes framework, then you need to ensure that it's going to be within your impact tolerances, etc. And whether you go and procure a third-party foundational model versus try and develop your own one is an important part of that decision-making process, because you have to have sufficient oversight over it. So that's just a practical example of how AI is a new equation in an existing framework, and governance frameworks need to cater for that. Another guardrail, which, and I'm glad Madhush mentioned it, is there sufficient governance and oversight over AI as it develops within financial services? And there I really mean, do we have the right people with the technical and the non-technical skills who can apply a governance process over AI, as opposed to just kind of receiving a questionnaire and assuming that all the questions are correct? The other area is, this is a fast growth area as it pertains to developers, right? We know some of the big foundational models, but the question is, they've not been used in the same way as a core banking platform could have been used. So is there sufficient ability to do due diligence over these foundational models to ensure that they've got the right level of resilience? And then the explainability aspect of AI does speak to things like cyber. If you're not able to explain how the machine is working, are you able to articulate what the cyber and other risks are in relation to that? So those are the guardrails. Within various sectors, including assurance and law, there is huge opportunity as well. Within KPMG Law, we are developing use cases that we will take to clients around regulatory review using AI-enabled foundational models. We're looking at contract generation. We're looking at risk assessments, systemic risk assessments across businesses. So there's a lot of opportunity as well. And, you know, I'm speaking as a lawyer. You know, you can imagine, you can forward this to regulatory lawyers as well. We advise on OpRes alongside assurance colleagues. There is a lot of opportunity as well.
No, I mean, I think it's interesting. We've talked about the OpsRes agenda, and obviously we're on a journey to become compliant to financial services. As a company, we deal with people in financial services and people outside, and a lot of our clients are at the very basic level of actually just sending a question out, do we use any AI in our businesses? So I think the nice thing from a financial services perspective, we have those frameworks in place. I guess the question really is, you know, when we started on the resilience agenda, AI was there, but it seems this year there's been an acceleration of its use. Have you had to change the way you look at that resilience agenda? Have you had to adapt because of the change in the way AI is being used? That's one part of the question. The second part is, how do you look at that as your own internal models and models you get from third parties, so the 1 and 221 piece?
So if I take the first question, there's probably a distinction between internally facing use cases of AI and externally facing use cases of AI. And financial services industry still, I'd stay quite considerate when it comes to using AI at scale for external clients. It's mostly being used as a productivity tool. It's, you know, the famous phrase of co-pilot. It's being used with a human in the middle. It's assisting efficiency. It's assisting code production. So I think we've still at really literally the bottom of the cliff as far as AI usage is concerned. I think we see that as a big opportunity though. And the opportunity is in the space of cybersecurity, as I mentioned before. The game around cybersecurity globally is changing, right? Where you could have humans attacking banks and national infrastructure. We have now the power and muscle of artificially intelligent systems, and we're working with a lot of our third-party suppliers who are now actively building, AI, ML capabilities into their software. We talk about third parties. A lot of the network perimeter that banks would traditionally had is expanded. We've got, instances in public cloud. We use private clouds. We've got lots of third parties where we host our data. Observability is becoming a real issue for financial organizations. If I can't see a threat end to end, then I can't defend against it. And that's again where AI ML become really, really handy to offer solutions around how can you deploy solutions which actually tell you this is what your threat landscape looks like and this is how you're doing against it. And then lastly, I think predictive analytics is being used again. I'd not say that it's started at scale, but a lot of organizations, I mean, just today Google announced that they could predict harsh weather conditions better than they've ever been able to predict through humans and other machines. And that becomes really interesting when we think about our insurance organization. If I'm able to predict a harsh weather condition much before it actually happens, I can equip my customers with a lot more information even before the threat has materialized. I can be taking preventive measures. If I can do risk modeling to say where the next threat might arise in my organization, that all helps towards operational resilience. So I would say on the defensive side, it has absolutely come into the conversation in a big way. I wouldn't say so much on the offensive side. We're not still seeing, AI operational resilience because we don't have scaled models yet in the financial services industry which support important business services.
I don't know, Jennifer, have you got anything else to add?
Absolutely. I think there's that piece around organizational maturity. AI in the main, lots of people use AI and mix that with machine learning. Machine learning absolutely has been out there for a long time. Large language model AI is relatively new to most people, even though everybody claims to be an expert in AI today. It's incredible. There is a journey there for organizational maturity. How you manage that in a risk management framework for financial services, what you're telling the regulator you're going to do, and how you support that, how you manage the risks internally. For most firms, they don't still have an AI policy within their risk management framework that they're publishing to the regulator. It's from that point onwards, then you start to use AI on the offensive within your organization because you're organizationally mature enough. Most organizations have model policies. Potentially the AI piece will lend itself to some of the modeling pieces within that. And inevitably, all organizations have data policies. But the three things must come together to provide an organization with enough maturity to really manage AI moving forwards.
But I guess that comes back to my opening point, which is there are the frameworks in place. We've got the ops res, we've got the data policy, we have, in financial services, we've got model risk management practices. I mean, we've got all the core tenets. AI fits, it's just something else that fits in that. It's just the acceleration of its adoption that is probably challenging those frameworks. I don't know, Usman, we talked earlier about sort of model risk and frameworks. I don't know if you've got any views on how they need to evolve in the concept of AI and machine learning.
Sure. I mean, I guess models going forward will be much more powerful, would have been trained on terabytes of data. If someone's finding it difficult to deal with existing models, they're really going to find it difficult to deal with foundational future models. So that's a big change. That goes back to the expertise point. I think broadly on this discussion, there's a couple of things that I wanted to add. I think with artificial intelligence, I think given the novel risks and the fact that these you can, and I'll talk about human in the loop as well, but given some of the things that we've seen happening in the wrong way, I think there is a need to have a left to right or a right to left whole spectrum of assurance and risk management activities. Left to right would be, for example, and I'm singing to myself here, lawyers looking at some of the risks. Right to left would be controls and risks and embedding those and using tooling to make sure that you can operationalize it. But I think there is a need to relook at it, not necessarily reinvent it, because I think you're right, the frameworks are there, but there is a need to relook at it. One final point about human in the loop, which is a phrase that does get used a lot, and actually it's been referred to in the EU AI Act as well. I think, and I'm not a psychologist, but I do think that we have to remember human in the loop also means human agency must be preserved, right? What we don't want is our humans in the loop to just become operators of AI machines without the skill set to extrapolate and interrogate what they're doing. And if you look at another completely different example, but it does show you the natural inclination that humans have to accept and rely on digital media. If you look at algorithmic recommender systems on social media, right, who basically get people into echo chambers and then make them believe that that's the real news, right? That's human in the loop, right? But a human without the ability to cynically look at what's being presented to that person. So human in the loop with human agency is important.
I think if I just add to that, there's an interesting debate happening around whether machine bias is worse than human bias. And one of the things, in the olden days in the banking industry, apparently bank managers wouldn't offer you a loan if you came dressed down. I'm sure that doesn't exist today. But is that better than machine bias? And I don't know if you guys have a view on that.
I absolutely agree with you. When we think about data and data sets are naturally biased. And, those people who use machines that do certain activities that create those data points have specific characteristics quite often. And so then we start thinking about how we smooth the data, how we take out bias. But if we took out bias, then let's think about credit decisioning. Everybody in this room would get the same credit decision. It's only through that optimization of those data points and understanding of each individual's attributes that each person in this room, and everybody in this room is different, should get a different credit decision, right? So how much bias do you take out of the model before it becomes the wrong outcome?
But I guess the question then is, do we just rely on the model and go, yep, that's right? Or is it a co-pilot, as Pallavi said, is going, so I have my own bias, the model then challenges me. Is it always that human intervention to say, I'm going to override the model because, and at least I have a decision, but at least I have that challenge, which we didn't have before. Usman, there's a question in here which takes us on to the regulation piece.
Yeah.
And it said, I'm sure you've seen that the EU is currently considering bringing in a framework that will standardise some compliance approaches internationally across the continent. What are your thoughts on that move? And do you see this as something that could also have negatives? So, as we discussed when we were preparing for this.
Okay, very good. Well, that's quite a big question. Let me try and break it down by looking at the EU, but also the UK and the US. So as most people know, one of the other important countries, which is China, has regulated generative AI specifically. In all the other jurisdictions, we're in the process of coming up with regulation. The UK's Department for Science, Innovation and Technology released this white paper earlier on this year. They focused on 5 key principles around AI. They stated that at this current stage, there wasn't going to be a regulation, but that there would be a response following the Safety Summit, right? But what has happened since then is that various different infrastructure and groups have been set up pursuant to that white paper in the UK. You've got the Digital Regulatory Cooperation Forum, which is 4 regulators looking at cross-sectoral regulation. It includes the FCA. You've got the AI Task Force. You've got the government's AI Central Risk Body, and we'll get a response soon. I think because of what's happened in the US, so let's go to the US before I finish off on the UK. In the EU. In the US, the presidential order is very detailed. It's 45 pages long. I mean, much longer than presidential orders under the previous president of the United States. And it focuses on a few things. It focuses on the principles, quite similar to the UK principles, but it also focuses on requiring government agencies within specified periods of time to look into specific issues and provide guidance. Now, the US approach, a bit like the Safety Summit, is focused on a few areas of interest to the US government. One, they're interested and want to regulate dual-use AI, so AI that can be used for defense purposes as well as other consumer purposes. They're also focused on finding out who is developing these sorts of powerful AI models externally to the US. So there's a requirement in there for any US cloud provider who's got a foreign client that's using their cloud to train models, for that cloud provider to notify the US government. Now that's quite interesting because they want to know who else and what else is out there. And there's a focus on cyber. So they've asked the National Institute, the NIST, to come up with some cyber principles. So the US is focused on some of the principles that we've got, but security as well. And I think post the Safety Summit, there'll be a focus by the UK government on security. Just rounding off on the EU. I think the EU is more focused on citizens' outcomes. So the EU AI Act is currently in the process of being agreed, but there's been a bit of a wrinkle. The EU AI Act focuses on 3 types of use of AI. So they're focused on outcomes. There's certain uses that are prohibited. For example, real-time biometric identification using AI. There's certain uses that are high risk, and creditworthiness decision-making is on that list. And then there's certain other uses which are fine. And high-risk use cases are the ones that are regulated by and large the most. There's a requirement to register them on an EU database. There's a requirement to create relevant technical documentation. There's all the other governance, accountability, risk management, all those other layers that you'd expect as part of good practice. Where it's currently having a wrinkle is that since the EU AI Act was published, GPT has come along, and now the legislators want to essentially regulate foundational models and general purpose AI models in the same way as high-risk models. And some of the EU countries are fighting back. So that's still an ongoing process. I think it can be confusing when you think of all these different developments in different parts of the world. But given I talked about the UK, EU, and the US, ones that are relevant for most of our institutions that we work for, but I would say there is definitely a case for being able to harmonize laws and regulations, partly because we have existing laws that apply to AI. You know, there's data privacy, there's cybersecurity. I'm going to gas myself out pretty soon, but there's.
I've got a question for you.
Okay, fine.
Because I guess that, with your crystal ball.
Yeah.
So your crystal ball. So at the moment we've got, as with any regulation, there's lots of different people moving at different speeds, focusing on different areas. A 1 year, 5 year view on where regulations get to, where do they harmonise? Do you see harmonisation? And where do you think the regulators will go with this?
So I don't believe there will be harmonisation. I believe there'll be some form of international regulatory group that is doing the deep research, like the UK is talking about, staying at the frontier of AI. But what I think organizations can do, and this is me crystal balling and gazing, and these are my personal opinions, not KPMG's, but what I think organizations can do, a bit like with GDPR compliance, you can gold plate. You can look at the highest level of regulation and gold plate your usage of AI to be in accordance with that. And I think if we're looking at it from that lens, all of the principles that the UK white paper contains will be enshrined at some point or are already enshrined in law. So it's all about safety, security, and robustness from a cyber perspective, fairness for consumers, transparency and explainability, giving consumers a right of redress, and then accountability and governance within organizations. All of those things are things that can be done now. But then rolling forward, where I think there'll be specific AI regulation with a level of harmonization is for the most powerful AI models and how they get used. So I think what that's going to mean is that organizations who consider refining an open source model might want to think twice, because essentially an open source model is designed for research and development purposes. If you want to commercialize it, then you're taking the regulatory burden to bring that to the market. That's what the EU AI Act already requires. So then what will happen? Well, it's bad for competition, because we'll be forced to look at organizations who have the funding to develop the most powerful models and who can bring it to the market in the most professionalized and governance-orientated way. And we can think of a handful of large organizations who that would be.
Yeah, I mean, and that brings us back to 221 again. I mean, third parties, but again, we haven't, I don't think the sort of critical third parties have actually been included in any legislation, and it's obviously something that we're worried about. You know, there are only 3 big cloud providers, so, you know, what do we do? How do we look at that through the lens of AI?
So I think there's obviously the DORA Act, which is coming in EU. I'm sure Usman would know more about it than me. There's also the Critical Third Party Act that the FCA, PRA are talking about right now. And personally, again, my personal views, not Lloyds Banking Group's views, I think there's been concentration in third parties forever, right? When we talk about organizations like British Telecom, the country would suffer if British Telecom wasn't available. So it is a critical third party. Just the fact that the cloud providers have made it so obvious to the regulators is frankly fascinating. But in my humble opinion, not the only place where concentration exists today. But absolutely, they're talking about bringing these critical third parties in the regulatory perimeter, because with the best will in the world, financial services organizations can try and influence third-party providers, but there's no governance, there's no oversight over them beyond the contracts that we all might individually agree with. So there's just a lot of lobbying happening right now with regulators to say, if you want us to be resilient, we have resilience through our supply chain as an important criteria. As a banking industry, maybe 2/3 or probably even more financial institutions now rely on the same 3 cloud providers. So there is enough concentration building in and enough of a case to bring them into the regulatory perimeter. And I know there are consultations out there to do that, but that will come with obviously burden on these cloud providers and organizations to then comply with the likes of SS 1 and 2.
So I think regulation is a superpower of the United Kingdom. And, you know, if I look at financial services specifically, because there are quite a number of regulators here, as in most jurisdictions, you know, we've taken a global leadership role in regulation. And through the Global Financial Regulator Network that the FCA leads, which is attended by most of the major regulators around the planet and the smaller ones. You know, the FCA is really setting standards and benchmarks. We've been doing a lot of work in the City of London around this. We're hosting a roundtable next month around global regulatory standardization. And I think that what's going to happen is, on a principles-based approach, you know, the principles that are adopted here in the United Kingdom will be rapidly adopted elsewhere in the world. And I think we have that capability here that is globally respected. And I think then how that looks in terms of the actual do, that will differ from legislative area to legislative area. But I think principles-based, we're going to lead the way.
I think I agree. I'm just conscious of time. We've got a number of questions in here. So first one I've got is, you speak of resilience. What are the key tenets required to run a financial institution that holds this operational resilience that you discuss?
So there are a number of pillars under operational resilience, and increasingly technology is becoming a really, really important component, but is not the only component, but an important one. So I'd say technology is one. People, a lot of technology is operated by people, so you have to have resilience in your people, and I think COVID's shown us the importance of having that resilience. That would be the second. We talked about third parties. Suppliers feature very, very heavily in any operational resilience agenda just because of the nature of financial services. We use a lot of third-party supply chain to provide essential services. So I'd say that'll be the third. I'd say the fourth one for me would be data. A lot of what we do is we manage data for our customers, and we organize that data, and we're providing data-led services. So I'd say that'll be the fourth tenet for me. And there's an intersection between all of these pieces because there's an overarching framework that then defines what an important business service is, how does that service manifest itself, what channels that service is presented itself in, and when and how does that start to cause intolerable harm. But in any service, you can practically map it down to technology, to humans, to locations. Property is another factor because, you have to have multiple geographies through which you can service, existing client needs. So those 5 things for me would be the underlying blocks of a good operational resilience framework.
Anything else to add, gentlemen?
Totally agree. Nothing else to add.
I mean, I think there's the one thing just to add on that is that bringing it together. In a lot of organisations, historically, those have been disparate disciplines. And the fact that you can bring that together, to your point, a lot of that is brought together by technology to be able to understand where certain things, they're all interconnected. The modern organisation, 20, 30 years ago, if you ran a mortgage desk, you literally had all your technology in one stack. You could go and see it. Now those are horizontal services that you don't actually know the person who runs your tech. So actually understanding how everything interconnects is very, very, very important. And obviously in this context where AI and machine learning then plays a part, is very important to have that transparency, complete transparency around actually what we do rely on in those IBSs. Another question. What do you believe is the single largest risk factor associated with AI implementation, and what solutions can be put in place to negate them?
Shall I go first?
Yeah.
I think when I think about it as a commercial organization, there's a lot of experimentation happening around AI. I think the biggest worry is having the skills and capabilities and being able to imagine the use cases that you can scale. I think from a commercial aspect, I'd say that'll be the biggest risk. There's lots of things you can experiment with. How do you convert those experiments into a scalable service, which meets all of the 20, 30 things you talked about in terms of regulation? You need to be explainable. You need to have the right data quality. You don't have to have any bias. So how do you really commercialize it? And where are the skills and capabilities, right? They're extremely rare. As you said, Madhush, people proclaim to be AI experts, but genuine capability is still quite scarce. So I'd say that'll be one thing, but I'm sure there are more risks.
I've got 5 actually.
Excellent.
And it's kind of a logical approach looking at an AI lifecycle. So the first risk factor is your use cases, like which ones are you going to choose? Because that's, a lot of decisioning goes into that. Input data, what input data you're using to train the model, validate and test it. Your model selection, we talked about open source foundational models potentially being higher risk, particularly if they get regulated, if you bring it to the market. Accountability and governance, and ongoing assurance. Those are parts of the AI lifecycle, but they're also quite important parts where a lot of governance is required.
I think there's a lot of concentration risk that we don't think about. And I absolutely agree with both Pallavi and Usman. But, 3 cloud providers, there's a handful of global foundational models. And our reliance on those models and those providers is really existential. We can manage all of the other risks that we've talked about, absolutely correctly spoken about. But we haven't really addressed the beast in the room, What do we do about having just 3 providers and a handful of foundational models? When I speak to Microsoft, for example, they're starting to deploy GPT for enterprise onto Azure for corporate users, and some users are asking them to turn off all of the Microsoft governance around those models. Microsoft's going, do you have the capability and the understanding to manage what you've just told us to turn off for you? I think there's a real challenge here for us.
Yeah, I think you're right. I think if you look at the disciplines I was referred to earlier, the discipline we had around model risk management, go back 2 years, it was manageable. With 2 things: one, the explosion of AI, and then obviously with the current SS 123 regulations, I think they go hand in hand. I think the consultation paper came out at a fortuitous time. I'm not sure that the PRA recognised that the inflection point we're going to have this year in the use of AI. But I think if you look at that, fundamentally we're talking about, Madhush, as you say, there's going to be more and more people using these things, and Usman, to your point, lots of different use cases. We've got to make sure that we have consistency in the way that we apply that governance across that use, and so we do understand genuinely the risk. I mean, our business is all about taking risks, but taking risks that we understand and undertaking it knowingly within parameters that we've set as an organisation. And the danger is someone thinks they're doing a fantastic job, but they expose us to risks that we weren't aware of. And that's I think the single biggest issue I think we face in terms of there's so many young graduates coming out now. I think someone said earlier, my mentors are 20 years younger than me. That's probably everybody in the room. Apart from the young people, sorry. But we don't understand, and we're setting the rules, and we've got to understand how to set the rules to be able to manage their use. Are there any questions? I've got one more question here. Are there any questions from the floor before I
Thank you, and a great panel. Thank you very much. One thing that's on my mind, and in terms of a lot of narrative out there, is actually this whole subject of misinformation. And if you think about what a lot of panels, including the one I was on, said this morning, and said during the day, there's a lot of inward-looking focus on, these are my models, this is how I'm going to govern it, I'm the good guy, I've got the processes, I've got the governance, I've got all of these things. And clearly that's something my consulting practice is probably going to be saying as well. The issue is that resilience is not just an inward-facing thing, because you're facing AI-related outputs, misinformation, disinformation from entities that you have no idea about, and where they can do this at scale, and it will happen at scale. So in the context of keeping up without tripping up, what are the sort of policy responses that you're seeing in the context of handling outside noise, which is going to become a big issue? And for a bank, I mean, all you need is, some AI saying that there's a bank run. That's it.
I think for the last 45 seconds, Pala, we talked about this just before we started.
We actually talked about it just before we started. We were talking about, what happened in the Silicon Valley, and, it's very easy to have social media. You talked about, those echo chambers in social media, spreading misinformation. I talked about the Pentagon, image as well. That's just real, and it's happening around us. And I think there's only as much you can control. You can monitor your Twitter feeds, you can monitor your social media feeds. You can't really go and monitor each and every channel that's out there in terms of social media use. And we do, and all banks do that, right? You're actively monitoring social media, you're actively monitoring references to your organization in any shape and form, and you're making sure you're proactively then, spreading the message. So if, for example, XYZ bank's going to go down, that XYZ bank should be actively monitoring social media to say, no, actually we're fine. But that's just one thing. We've had, fake videos of CEOs asking CFOs to transfer money, and they've done that. So it's just that the risk is real. It's absolutely real. We've had voice imitation, right? There have been incidents where people have had so-called phone calls from their kids saying, I'm stuck, please send money on this account, and they've done that. And as an organization, fraud prevention is absolutely an area of focus for us. How do you then really distinguish between what's a real fraud versus an AI-generated fraud, or what's a real claim versus what's an AI-generated picture of, oh, look, my house is flooded here. All real things. I don't think the threat's going away anytime soon.
Excellent. Well, Pallavi, Madhush as well, thank you very much indeed. The time has flipped by. I hope everybody enjoyed the session. Thank you very much.